Hello and welcome to Landlord Coffee Talk, proudly presented by the Southern California Apartment Group, Shant Sherbetdjian's office, your trusted multi-unit specialist. I'm Mary Sherbet, serving as the Marketing Director at Southern California Apartment Group. We recognize that investors frequently encounter similar questions, and in light of this, we've decided to broadcast and share these common inquiries with our fellow apartment building owners, such as yourselves. Our aim is to provide valuable insights and solutions to address these concerns, just as we've done for our cherished clients. Join us for our informative 20-minute Q&A fire rounds. We're here to aim and provide answers to those burning questions that have been on your mind. Welcoming Gino Mattunts from Safecal Insurance today. Gino, how are you doing?
Thank you. I'm very excited. Thank you.
I'm excited to be here, and we're going to dive in deep and get some of these answers to these questions. So I look forward to it. Now, it appears that insurance has really changed within the last 3 to 4 years. I'm noticing, along with our apartment building owners are noticing, that underwriters are becoming really stringent on these guidelines. Things that they have been written before are not being provided again in this day and age. So there are some questions our apartment owners have had, and I'm going to get into it right now. You're going to answer those for us.
All right.
This question came to us about last week. We are in it right now, and this is Jordan. Jordan is purchasing an 8-unit property in Glendora. The current owner's insurance carrier no longer wants to write coverage on this building. The carrier has denied to requote, even though it insures the building today. Now, Jordan is subject to a different carrier, and he's looking at a 30% premium increase than what the current owner pays. Is this common? We're seeing this happen a lot.
Well, this particular case in Glendora, we have to look at actual location, look at, there's many things to just, price is not the only problem. I see that he has a 30% increase, but we have to look at what the current carrier is doing as far as their guideline changes. We have to look at the coverage of the old policy versus new policy. So there's a lot of things, but of course, insurance rates has gone up, mainly because of all the replacement costs of the properties have gone up.
Okay.
Construction cost has gone up.
Right.
So the insurance companies really want to charge more for the same properties insurance as last year.
They do. So it all depends on how the current owner's policy, when it was written, let's say it was written 10 years ago, right? The same premium doesn't apply today. It's a 30% increase. But why don't they want to requote it? They're like, I'm sorry, we're out of this market now.
So we have to look at this particular location, but let's say guidelines have changed a lot. So electrical panels, roof have come in as far as one of the main things that the insurance company looks at.
I see. Okay.
The housekeeping of the property, if it's clean, if it's any debris on the property, they look at this. There's a lot of ways they look at pre-underwrite the property by Google Map View, Street View. They have third-party software. They can really zoom in on the property and really check it out before actually providing a quote. So a lot of companies, just by looking at these 3 things, they deny going forward and giving a quote. So when you have less of carriers pool to choose from, your rates are obviously higher.
You're subject to higher rates. I see. So we are seeing this happen, and for the sellers and or the buyers, as in the due diligence process, right? We're getting into selling the building or buying the building. We're getting close to, let's say, closing it, and all of a sudden, boom, we hit this like strong brakes are on, insurance cannot be found. Do you recommend, or what do you recommend for the sellers and or the buyers to be insurance ready to ensure a smooth transition throughout escrow? What part of the due diligence process should we get an agent involved to take a look at this stuff?
So I would say to really be able to quote a property, we need at least 2 weeks, I would say, if there's any issues. If the property is built 1990 and newer, most likely there's no issues.
Got it.
But if it's anything below 1990, insurance companies start really going down as far as underwriting, looking at the roof, looking at the electrical plumbing, sub panels, all these things. They want pictures, they want permits, but they want a lot of stuff. So that takes time.
Okay.
And especially when you're going through a purchase process,
right,
that might not be your number one thing that you need to
Right, that second,
address.
yeah.
So we want to have, as soon as you're looking at the property, our agency is able to give you some kind of maybe like an hour of just overview of what the property looks like for insurance purposes, and maybe able to ask you to have specific things in escrow, require things from the seller. So it's something that you can definitely
get ahead of the curve.
Get ahead of the curve, yeah, and ask an agent that specializes in apartment property. Not every agent is able to do all this detail work. So make sure you're talking to an agent that's specializing in apartment and property insurance.
Okay, fantastic. That's good advice. Definitely do get ahead of the curve. Now, interesting you mentioned electrical panels, and so here's another one. This came into our office about 4 weeks ago, and he says, I've been insured with the same policy for over 10 years. Recently, my insurance is dropping me because I have Federal Pacific electrical panels. I'm unable to get insurance unless I completely redo my electrical panels, which I know will cost me an arm and a leg for my apartment units. Each panel does cost a lot. Why are Federal Pacific panels such a big deal and a big no-no for insurance companies? And what are his options? Let's say he doesn't have the funds to switch out the panels right this second.
So the Federal Pacific is not the only one.
Okay.
There's other ones. There's Stop Block, there's Zinsco, there's a list of ones that insurance companies have listed as prohibited, and they're in they trigger fires.
Okay, and it's something to do with the mechanism that does.
Apparently, I definitely.
You're not an electrician.
But what I know is that they don't trigger shut off when they're supposed to,
I see.
and it triggers the short, and it
the fuse goes off, and the
fuse
fires
doesn't go off.
Oh, that's right.
So the fuse doesn't go off, and that's what causes this short and fires. So the insurance companies don't like that.
Okay.
And so they stay away from this type of fuses.
Right.
So if a person doesn't have an option to replace those, that could be costly, especially if it's a multifamily unit. Each one could be upwards of, I'm not sure, but maybe $4,000 or $5,000 each unit. So if a person that's buying the property is not changing it, and the current owner doesn't want to change it, there's an option to buy with a carrier that is able to offer actual cash value instead of replacement cost value of the property.
What's the difference there? Replacement cost versus actual cash?
So replacement cost is guaranteed to replace the property.
Okay,
but
I see.
But the actual cash value is to whatever you purchase. If you purchase $1 million at the time,
that's all they'll give you.
That's all they'll give you.
Even though it would cost $1.5 million to replace it, they won't go up to 1.5.
So if the damage is $200,000,
right?
So with replacement cost, if they'll pay you $200,000,
right?
And then if you actually replace those items that were damaged and you pay more, you go back to the insurance company and say, "Here, I spent $150,000 instead of $100,000. Now I need to get the difference." And they'll replace you and reimburse you for the difference.
I see.
But actual cash value is just that.
Just that. It's whatever the policy's written is what you're going to get.
Exactly.
I see. And so actual cash value is common in insurance carrier or company?
No, I don't remember the last time I really did an actual cash value, because it has to be
it
really.
It can get a double-edged sword, that's for sure.
It's not good policy to be in.
I see, okay. But there is an option. You can purchase an actual cash value. Now, I've noticed, and correct me if I'm wrong, there's admitted and non-admitted, and a lot of non-admitted carriers offer this actual cash value option.
Yeah, the admitted carriers stay away from anything actual cash value.
They do, okay.
The admitted carriers required to have at least a replacement cost extension as well, so you can buy $1 million policy and then add another 50%, 25% replacement cost extension on it. But actual cash value carriers that are offering that kind of policy, usually non-admitted, that doesn't mean they're a bad company.
Right, what is the difference? So you've got admitted and non-admitted. It doesn't mean that they're a bad company. It's an insurance company that obviously exists.
Exactly. So Department of Insurance, California Department of Insurance, gives them the authority to become admitted or not.
Sure.
And when you do become admitted, there's a lot of rules and regulations in California that you have to comply by. So the things like actual cash value, things like replacement cost estimation, and the way they cover claims, and what's able to be excluded from policy or included from the policy, all these things are determined by Department of Insurance if you want to be an admitted company. So if you're not admitted, you're able to play a different game as far as the insurance. You're able to exclude things. You're able to change things, charge more or less depending on the condition.
I see.
So it's more customized insurance when you're not admitted.
Right.
But
Maybe to their liking sometimes.
Most
of the time.
Yeah.
Got it.
So you
Okay.
have to have an agent that really has a know-how in a not admitted
Sure.
market to be able to really customize the policy for your benefit.
Right. For speaking of, like, let's say multi-unit families or apartment buildings, you have to have an agent. If you do come across and you need to have a non-admitted carrier insure you, you want to make sure your agent knows what to not exclude
Exactly.
and what to include.
There's a lot of
Okay.
policy coverages that are like business income, ordinance of law. These things don't come on a policy as far as a non-admitted company.
Right.
Admitted company has to give you these things when you
Regardless.
ask for a package. So if
Right.
the insurance agent just sends in an address saying, hey, I want insurance for this property, and it's a non-admitted carrier, they'll look at the replacement cost of the property and say, okay, how about
This
$2
is
million coverage? But then there's business income you don't have. There's
Right.
ordinance of law that you don't have. You don't have water backup. You don't have water coverage or theft exclusion, vandalism exclusion.
Right.
These things have to be really looked at.
Got it. Now, let's say in this gentleman's case, he's going to go with a non-admitted carrier. He's concerned, does that trigger anything with his lender? Would the lender look at this and be like, hey, this is a non-admitted carrier, we got to...
Well, the lenders look at the AM Best rating of the company, not as far as admitted or not admitted.
Okay.
So I haven't seen a carrier that says only admitted
Right.
carriers, but they are required to have A rating whenever there's lender involved. Most of the lenders will require the carrier to be AM Best rated to be A+.
Right.
And AM Best is a rating company that rates all of the only insurance companies.
Okay.
So they give them a grade from A to C and B. So if anyone's below A, I would say stay away.
Stay away. Okay. Good advice. I've got another one here. This came up 3 weeks ago. He says, my insurance premium is increasing every year over year, and I have not filed one claim. What are some factors that increases my insurance premium, and how often should I shop my insurance? Should I just pay it, or should I consider looking at other options?
So rate increasing from carriers could be several factors. They could have a rate increase that goes out to all the policies. You could have a policy that has an inflation guard in place in your property coverage that increases coverage every year. So when you're increasing coverage, your rate slightly changes. But most of the time when the property owner sees the bill is significantly higher, it's because the carrier rate increase.
Okay.
So that should be notified as well by the insurance agent.
Okay.
They should be shopping around regardless if you're shopping around or not. So they should be looking at different carriers before you pay your renewal offer.
I see. So would you say probably 60 to 90 days before your renewal, should you hear from your agent to say, hey, let's
You might, a conversation that's too early for an agent to start working on a renewal quote. Why? Because 30 days is the maximum quote expiration date. So if you get a quote, that quote will expire in 30 days.
Right.
So there's no point actually getting a quote 90 days ahead of time where you're not going to be purchasing that quote.
That's true.
Unless the rates are so significantly less that you're like, just cancel my existing policy and go with this one.
go with this one.
That rarely happens, but it could happen.
It could, especially in today's climate. Now, with that said, there's been so many moving parts with insurance, and we are hitting roadblocks during our due diligence process and escrows. As an agent, you are in it knee-deep all day, every day. Where do you see insurance going? What's going to happen in the next 6 to 12 months?
I'm assuming that the Department of Insurance is going to ease up on the restrictions that they put in place on the insurance carriers. Yesterday, California Fair Plan just increased their appetite from $3 million to $20 million in coverage for property, commercial property.
Okay.
So that means they're panicking, their insurance companies are really not taking any property, so they have to increase it to be able to take more bigger properties, higher limits. Mind you, 1 year ago it was 1.5 million only.
Wow.
So this is a significant change.
Right.
It could be good for the consumer, but I think Department of Insurance and the regulatory body that controls this whole thing are going to ease up on the carriers to be allowed to take rates which means raise their rates.
Okay.
So when they raise their rates, at least they'll come back into market,
Right.
and it'll be more healthier competition within the carriers
Right.
to take more business in.
I see. So the Department of Insurance regulates these rates? for
Yes. So
insurance?
if you're going to charge a certain rate to in California and you're in an admitted carrier,
Right.
you must take that approval from Department of Insurance. And if you want to change that rate more than 6.9%,
Okay.
you have to go through a regulatory body, and you have to.
It could take months
It could
for
take
this
months,
approval
and
process.
you could even actually have had carriers when they go in for a rate increase,
Right.
they end up getting a rate decrease.
Oh,
So they can look
gosh.
at you and say, you know what, you don't need a rate increase.
We're
We're
gonna-
going to lower your
gosh.
rate.
So they want to avoid this, they being the
They
insurance
don't-
carrier, they want to
yeah.
avoid this process. And in lieu of that, they're going to just really
So
be
the
stringent.
easy way,
Uh-huh.
to get increase is you go into the Department of Insurance and ask for 6.9.
Okay.
That's the magic number. So
Okay.
6.9%, there is like a fast track, get your
Sure.
rate, go away. But the only states that are doing that is California, New York, and New Jersey.
Okay.
And these are the states that have this type of
So
problem.
3 states have a bureau on top of them called the Department of Insurance, and no other state does.
They
besides
do
these
it.
3. Oh,
They all do,
They all
but
do.
they don't have that regulatory system that doesn't let them increase
Rates
rates
as-
the way California, New York,
Got
New
it.
Jersey.
Got it. And because they hand, so this is why underwriting has become so
Exactly.
stringent lately. Is because hey, if we can't increase rates and it takes for us for a while to, we're not going to write, and
Exactly.
we're going to not write for Federal Pacific. We're not going to write for underwriting.
So those guidelines that they can change overnight.
Yeah.
So tomorrow you can say, I don't want any more tile roof.
Yeah.
That's it. But that doesn't need a Department of Insurance approval.
I see what's
So,
happening
yeah.
now. Okay.
So they
wow.
take in less business, and at the and wait until this rate goes up.
Oh my gosh, incredible. I really do hope that insurance companies in California do come around. I want them to start writing. I mean, what's really happening in our office is we're getting calls at the 11th hour of the day, at the 11th hour of the night saying, we need to find insurance. My insurance agent is unable to find me insurance policy. I need to close this building. I've got 2 days to do so. What happens there, and what advice can I give this individual?
Well, I do hope the insurance companies come around as well, but
Yeah.
a lot of people shopping for property insurance or being non-renewed currently wait too long. They give their current agent too much time. They think something's going to come back, and they end up either non-renewed and expired.
Right.
I've seen clients with bank-forced policies. So
yes.
it's really
Heard about
hard.
that.
So they need to really talk to someone that knows what they're doing.
Yes,
A lot of people that get referred from your office
yes.
in
You've taken care of them.
Yeah, it doesn't, we don't have enough time to work on it. Even though I take the accounts and I write them, they need to be a little more proactive. As soon as they get that non-renewal, to contact me, or as soon as they see that the carrier is raising rates, to contact me. Anything for me to have enough time to really work the market. So I don't just work with 1 or 2 companies. I work with admitted, non-admitted, companies that even
Right.
get special rates for
Yes.
us. So they really need to be proactive on getting in contact with us.
Absolutely, and speaking of in contact with you, I mean, I think we've called you at like one time at like 10:30 or 11 o'clock at night, and you were able to drum up something real
Yeah.
fast. The next day, we were able to close this property, which was a huge success for us. So, I do agree with you. Is definitely work with someone who knows what they're doing, who's able to have enough markets to be able to provide not just one quote, but a few quotes, a
Exactly.
few options for you.
Exactly.
So, 100% cheers to that. Amazing information, Gino. This was a lot. We barely even scratched the surface with this one, but we've got so much more to cover, and we don't have the time. But the good news is that we have a dedicated text hotline where you can send in your questions. Our team guarantees a response within 24 hours, and one of our experts will be available to provide you with advice. So if you have burning questions or need further insights, don't hesitate to reach out to us through our text hotline at 626-650-9547. You can even give our office a call at Southern California Apartment Group. Our phone number is 626-657-8150. We're here to assist you. Thank you all so much for tuning in.
Mary, thank you so much for having me here.
I love it.
Appreciate it.
Cheers. Fantastic day today. This was great. Thanks,
Cheers.
guys.